Hey, good morning. It's Jamie. It is January 6, 2023, and I'm on my way to work. I just dropped my girls off to school. I stopped to have a little breakfast. I do that occasionally. I've been eating just omelets, veggie omelets, and bacon. Bacon. But I'm like, yeah, I like bacon. But no bread, no potatoes, none of that stuff. No pancakes. I love pancakes and waffles, but I'm on this keto thing. I'm going to try for the whole month. It's been about a week, and so far I've lost about 4 or 5 pounds. I've been able successfully to drop weight, but to maintain it, right? To keep the weight off. And as you get older, to me, keeping the weight off is more important. Reduce health risk. It's just better for your joints and all that stuff. So, self-investing in your health, I think, is important for your quality of life as you get older. And if you start to do this now in your 20s or 30s or your 30s or 40s or 50s or 60s, right? Like, obviously, the older you get, the harder it probably is. And not that it's ever too late to reap the benefits. I mentioned the other day I had somebody in my office that was close to 80, and he looked fantastic. His skin was good. He was sharp. I would have guessed he was in his early to mid 60s, and he was like 77. Yeah. And he said he played a lot of tennis. Because I played tennis 3 to 5 times a week, and that was one of the things. But anyway, gotta keep moving, right? Flexibility, oxygen, hydration, not poisoning ourselves with a lot of stuff. But I'm no expert on that. I'm figuring it out as I get older. And I'm just sharing that with you. So anyway, I'll keep you posted on my progress with my weight portfolio, or my health stuff. But I wanted to just talk about some of this stock stuff today before I get in. And this is the first quarter. I know today is the job report of as expected or not as expected or better than expected, right? All these different reports that that everyone's going to watch to see if the job unemployment rate has gone up, or if it stayed the same, or if the job market is still strong. That has an effect, right, on inflation and rate hikes and things are coming. So I looked at my Tesla stock, which to me is a good indicator of my big position I have with the Robinhood account. Whereas this year the goal is to get it to 100. I'm starting at around 10. That's where I'm going into the year with at 10. But that's from a carryover from the previous year. I haven't sold my shares of Tesla. I think my strategy will most likely be just to hold throughout the year, accumulate maybe some other companies, and other than maybe selling some calls and puts, we'll see how that goes. But Tesla this morning, when I checked it, was down another 7.5%. Just huge, man. Just keeps dropping 3%. The other day it was 12%, almost 14% with that. You could say, at the all-time lows for the day, it was 14%, over 14%. It just seems like Tesla's destined to break the 100 mark here, and it might do it today. It was at a 101 change. I think once it gets to 100, it's probably going to then make its way. I was really thinking that Tesla would have some kind of recovery or relief. I think they call it a relief bounce, where it would go up. Because if you look at that chart, you don't have to be a Wall Street expert or technical analyst expert to know, man, it looks just so oversold, massively oversold on the weekly, on the daily, and then when you get to the hourlies and those stuff like that, it's a little bit different. But it looks so oversold that it seems like it's due for some type of relief bounce, right? But it just keeps getting beat down more and more. So if you're in that position with any company and you're looking at I was talking to a friend of mine who was older, and he was just so discouraged, right? And he's not a trader. He's not a swing trader like me. And he's not really an investor. If anything, he just has he has a traditional long-term 401k that's pretty substantial for a regular guy. Not a lot of people are able to do that. save for 20, 30, 40 years and and have a seven-figure portfolio. But again, he's in his late 50s. He's getting close to retirement. He told me, over the next 5 years or so, he's thinking. But when you look at that over the years and years that you've accumulated your nest egg, right? And whatever that looks like for you, to see it down 20, 30, 40% or more, it is discouraging, right? Even if you have time for it to recover, that sucks, right? But I try to have the mindset of not being oblivious, right? Like just la 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 doesn't happen. It's not that it's not happening, because it is happening, and it potentially will get worse or much worse over the next 6 months, 12 months, 18 months. I don't know. But you kind of have to have an attitude of understanding that there's nothing you can do about the stock prices of these companies. And some are pulling back harder than others. You could try to make a play to kind of even yourself out and say, you know what, I'll buy some of this company and I'll buy some of that company, just like wherever it is, and it maybe still go down, right? Regardless if it's not plummeting down like say Tesla shares, right? Tesla shareholders, I'm sure if you got them in a room, I would think that this next meeting, when Tesla has the meeting where they Elon answers some questions, he's going to get some pretty rough feedback, because he's going to be held accountable or responsible for the share price going down. And Elon Musk is a very intelligent guy, an exceptional human being, but he's going to catch a lot of flack. But really, whatever's going to happen throughout the rest of this year, whatever money that you're investing, whether it's short term or long term, if you're going to look at it like, oh wow, I'm down, selling today may not be yours or my best option, because if a share price of whatever company was $1, or if it's in your portfolio, I'm just giving you a very easy example. Let's say $100. Right? So let's say that if you averaged out all of your savings and your investment into one portfolio, and the average cost per share of that portfolio, let's call it the John Doe portfolio. It could be a 401k. It could be a Roth IRA or a Roth 401k. It could be an ETF, an index fund. It could be accumulation of all your shares in a certain account like Moo or Webull or Robinhood or Thinkorswim or Fidelity or whatever it is. And if you said, with all the money I put in, I'm at about $100 a share, right, of what I've invested in that. And it's down 30, 40%. So basically, it's worth $60 for the 100 you got in. You're down by the lot. So if you sold it today and said, I'm out, why would you do that? It's either because you're in a desperate situation, and I'm not making fun of you for that, but you're like, I got to get money. I need the money because I have other things I need to take care of. Okay, maybe there's some solutions there, but I feel like I don't have to take this money. It just is killing me to see my portfolio go down so much, like my friend that I told you about. So if you don't need the money for 5 more years, for say, whatever that portfolio looks like, why would you touch it? If you can't add more because you're like, I'm afraid to do it. I'm afraid to add more because I add more and I think I'm dollar cost averaging into my portfolio, and it just keeps going lower. And what if it goes down another 20%? Okay, that's possible, but you don't know that. I don't know that. We just get these murmurs. How many times have you been at school, like whether you went to high school or college, or at your workplace, or in your family, right? Like just people calling each other, and they embellish. There's a lot of hype. They talk about things that may or may not happen. They gossip, right? Like that's what the news is to me. It's just that's what draws eyeballs. Like these headlines and topics that are disastrous, right? Like whatever even on YouTube, if you go to like a YouTube channel, which people have millions of subscribers, that they do this bait. They even say it. It's like a clickbait. So they'll put a topic or headline saying that he just did this. His so and so and this happened. So and so did this, and then this happened, and they like try to get you to kind of like, oh, I got to know what happened. So I'm not. I'm not going to say that I've never clicked that kind of stuff or read a headline and try to look at it a little bit more. I'm susceptible to that stuff too. But I'm also a little wiser, a little older, a little wiser. So I'm a little bit more hesitant to just follow the headlines. And I'd kind of, no one's going to come to save you, you've heard, right? No one's coming to save you. When you're a child, maybe your parents or siblings might come save you, so to speak. And then that's why they say, oh, he or she is being babied or coddled, which isn't exactly the best thing. You got to kind of build up some resilience, in my opinion. But as you get older, as a young woman, young man, maybe these people in your life will help you and encourage you, but you got to stand on your own 2 feet. So whatever your portfolio looks like or mine looks like, you got to make your own decisions. I don't need anyone to tell me what I should do. I could listen to them objectively, listen to some of their opinions, and then decide how I'm going to carry forward, right, over the next weeks and months with that portfolio. My strategy today, I was listening this morning when I was eating the breakfast, and I'm going to get into that before I wrap out. I was listening to Stockmo, right, which is another, just one of many people I'll just listen to occasionally. He was giving his Tesla stock price prediction, and he said, I'm not sure this is what's going to happen, but and he owns a lot of Tesla. He's like, I think we're probably going to see $70, $80. Some people are saying $60. Some people are saying $25. So the consensus, like I try to hear, like, what is this one, this one, this one, this one? It seems like there's a lot of that $60 to $80 range. So I won't be surprised if it goes there. Now, it could go lower. It could never go there. But either way, if you hear a storm is coming, it's probably better to be prepared instead of getting wiped out, like just saying, it's the weatherman's always wrong, right? Like, but all these channels are predicting a huge hurricane coming. So even if it's not as huge as they say, it might be a good idea to pick up your yard, to secure some stuff that might get blown around, right? Make sure your windows are shut. I don't know, like just basic thing. If you lose power, make sure you're prepared for that. It's not going to hurt you. So if you're in a portfolio, you're like, it could go down another 20%. It could go down much lower than we've already seen because of what's going on. Then it's best just to have some strategies and some plans in place so that you're like, okay, it could. What do I do? Do I need the money? If I need the money, maybe I should figure out some solutions where I have to get it out now before it gets worse. I personally think that's a mistake. If you could borrow against that portfolio, it might be a good idea because all you're doing is trying to buy some time to the desk. Like if you could have just held out another 6 months, if you could have just held another year, I've seen that happen a lot where people recovered, their portfolios recovered, but they had already sold. I mean, they could have recovered, but they sold out of their position early because of fear and panic, right? And emotion, and me guilty as well. And then later on go, I wish I wouldn't have done that. If I would have just waited a few more months or another year. Like in the grand scheme of things, is a year or two that important? I mean, it might seem like it, but if the money was going to sit there anyway and it just bothered you to look at it negatively, does it really matter, right? What 2 years is going to bring? Let's say 2 years. Let's say 2 years. Do I think we'll get back to the all-time highs of everything that's out there? Maybe not, right? But I can't imagine it getting, no, I shouldn't say that. It may get worse, but at some point you get to the bottom, and though there may be some more room to kind of bottom out, we're probably closer to the bottom of whatever it is than we are to the top, right? That's what I'm saying. So even if you start seeing a slow recovery over the next 6 months to 18 months, we're probably closer to that than we are at all-time highs. Does that make sense? So it's not like, I bought now, even if it does go down another 20%, let's say, then the chances of you saying, I bought way too high is probabilities not as likely, okay? So the last thing I want to leave with is when I have breakfast anywhere, what I find is there's some business, like where I went through this morning, I can't think of the name of the place. It was a place close to my girl's school. and it's just a little diner. I went to one place, it was packed, and I didn't have time. I was like, I don't have time. People waiting for pancakes and waffles and eggs and bacon and sausage and all that stuff, and they just different ages, right? Different older people, younger people, hardworking people, business people, young guys, just all this different array of people having breakfast. And there wasn't people in business suits running that place. There were just regular people serving breakfast. I went to another breakfast place just a few blocks away, like, a few blocks over, packed again, right? People going to have breakfast. Now, there's a few other businesses. One was like a smoothie place or something, where they a juicing place, empty. They were just sitting at the counter and everything was empty. Nobody was going in and out. They might have a high point, a low point, but it was completely empty. So I thought, there's certain things that there's still going to be people spending money. Why? Because it's not that expensive to go spend $10, $20, right? Depending on how often you go, and have a little comfort where you say, like, I'm going to have somebody serve me some coffee, and I had a veggie omelet, right? So I sat there and I ate, and I felt a little better. All right, I got a little service, a smile in this case. The waitress was friendly, and I enjoyed watching the people. So there's going to be businesses that still thrive and survive throughout this continued recession or hard recession. And you got to look for opportunities. I even thought of, maybe I should invest with some of these people and say, "Would you want to open up another breakfast place?" I don't want to do anything, but like personally, not that I wouldn't cook eggs or anything, but maybe there's opportunity. Sometimes where you see a need, right? There's other opportunities that get created, and you can maybe shift some of your money. I'm not telling you to go open a breakfast place. I'm just saying that you might just recognize a potential opportunity that's very clear, right? So if I could think of a place where I live and I'm like, do I have enough breakfast places around me? Because I could see 2 or 3 places in one area, all kind of condensed, and all of them are busy, right? So if you see a need for a breakfast place where you are, and I'm like, wow, you know what? I think a breakfast joint would do really good here. I'm telling you, like, this is something I'm thinking about, not because it matters, it's a breakfast joint, but I'm like, there's a real, not a need, but there's an opportunity here to do something like that, and I think people would go and spend money. And I don't know how, I've never owned a business like that, but there may be an opportunity, and this can carry over into anything, whether it's in investing and you see an oversold, company, or you just recognize some opportunities, or you hear something. It could be opening another type of business, whatever the diversification may be. So anyway, that's my thought for today on Friday, going into the weekend. Tough first week, but hey, we got through it. Okay, so we'll see how these job reports come out and how it affects the market, and I'll see you guys next video. Bye.